My name is Gaurav Sharma. I'm a London-based energy analyst, and I write for Forbes and Energy Connects and various publications. It's great to be here to discuss this very profound topic we have at hand. Over the course of proceedings yesterday, we saw Mr. Puri and several other international leaders discuss the profound changes the world is encountering with the energy at its very core. And we started talking about energy transition economics. And obviously, finance and investment is a key pillar. In fact, the pillar. Without money, there's money and investment dollars to back it. There is nothing. So how do we bridge this gap? To discuss this emerging landscape, we have an all-star cast of characters joining us today. Joining me on the stage first off is Mr. Bhupinder Singh Bhalla, who is the former secretary for the Ministry of New and Renewable Energy. With me also is Roberto Bocca, who is the head Center for Energy and Materials and member of the executive committee at the World Economic Forum. Also joining us is Hitesh Vaid, who is the chief financial officer of Cairn Oil and Gas. And last but certainly not the least, it's Katan Hirachand, who is the chief executive and chief country officer of Societe Generale Bank. Welcome, gentlemen. It's great to have you, and we really appreciate you making the time to provide us with your insight over the next hour that approaches us. But without much further ado, if I may turn to all of you, starting with you, Bhupinder, let's go down to the brass tacks. We use these big words, bridging the gap. What does bridging the gap really mean in practice?
Thank you, Gaurav. If you realize, for example, give an example of India first, and then maybe talk about other things. We started our renewable energy journey roughly about 10 years ago. I mean, it was there before that, but the space had actually picked up 10 years ago. And 10 years ago, we were about 75 gigawatts of entire capacity in India. And today, as we stand, it's about 212. That's the kind of growth which has happened in 10 years. Now, it has needed investments, of course. I mean, when you go down that path, we want to make sure that the private enterprises who are going to execute the projects have enough finance. Our estimate is that we have invested about 8 lakh crore, about 7 lakh crore, maybe about 80 billion plus minus a few $billion in this path from 75 to 210 and 212. Most of it has, of course, apart from the equity, which is about 30% of what the investment is, funds, but 70% has to come from debt and other sources. And if you look at the character of debt in India, and if you look at, about public sector banks, which are huge in India, banking sector is pretty thriving and very well entrenched. However, in renewable energy, they haven't really played that role. If you look at the data, the biggest role has been played by IREDA, the NBFCs, IREDA, REC, PFC. And banks have been there, but not to that extent. Now, therefore, when you move ahead from now 200, now we're talking about, now we are 210, 12, we have non-fossil of 220. From 220, now we have to go to 500 by 2030. That's our announced target. And that means, we invested about 80 billion in last 10 years, but now we need about $400 billion. Earlier, we were only focusing on, making sure the projects come online. However, now we have to make sure that manufacturing is there. We want to be sure, we want to be Atmanirbhar, we want to make sure that there's no supply chain issues. So you have to have you have to plan for extra transmission capacities. Earlier, it was pretty easier. You could balance it based on the kind of transmission which was there. You could build it up slowly. If you're going to ramp it up in 5 years, 6 years, that means you really have to work hard on adding the transmission capacity. So now we estimate that for the next till 2030, what we need is about $400 billion investment, which is needed in the sector, looking at the entire chain, including batteries and so on. That's the scale we're talking about, 80 billion to 400, 80 billion in 10 years, and we're talking about another, 400 billion in the next 6 years. Sure. That is what I'm talking about. And therefore, although, we have tried a bit, but you must appreciate that unless there is financing available, unless there is enough equity, unless there is enough financing of debt or other way, you will not be able to meet the target. And therefore, that's the kind of scale that we're talking about, and therefore bridging this gap, the available resources of the banks and the NBFCs, how do you bridge that and make sure that they move towards 500? I think I'll just stop here in the beginning.
Roberto, Bhupinder set the stall. Your colleagues at the World Economic Forum, you've published research that a near doubling of investment will be required. So we're somewhere around $2 trillion is the projection right now. We'd need somewhere in the region of $4 trillion by the end of this decade. It's a mammoth task, isn't it?
Yes, and when we look at emerging and developing economies in general, what looks like, your question, looks like we are inverting the proportion. Let me explain. So today we have about 2/3 of the world population living in emerging and developing economies, but only 15% of the investment in renewable energy goes to the emerging and developing economies. So this equation doesn't work. Also because you think today is 2/3 of the population, but it's a growing population, and it's a growing population in terms of number and also standard of living. So most of the demand will be in emerging and developing economies, so you can't have only 15% of the investment going there. So this percentage, or the amount of money has to increase, and it has also to increase significantly in emerging and developing economies. So what it looks like, if we meet here in the number 5 or 6 of this event in 2 or 3 years, we will have inverted that percentage of how much money goes to the emerging and developing economies.
Hitesh, from your perspective, you're operating in this market. You've seen the key role that finance plays in terms of energy projects when you reconcile both the traditional with the renewable. So your perspective on bridging this gap.
See, I think, the way, before finance, I think, first is, the access to energy. The way it has, evolved over so many years, right? There is a difference in the sense, that gap also has to be first bridged. And now, when people say in the Western world are moving to renewable, plus, as I said, 2/3 of the population is in this part of the world. So, if you have to make it accessible to them, right, it's going to be a different challenge. Now, in this context, from finance point of view, the availability of money will be only there where there is a return, right? Because there is going to be no free money. We can, we want government to partner, but, every government, every geography will have their different limitations, right? So obviously there we will need private and public partnership, but ultimately, it has to make a return. It will make a return when it is affordable to the consumers, right? So I think what we'll have to figure out is there are differences between various geographies. If you talk about, say, Indian context, we are in a very sweet spot in the sense that, India has developed over the last, say, decade. And in that decade, while we want to, increase our energy consumption, and that's why we are focusing on a lot of other things, and we also want to not be too much dependent on fossil fuel. So a lot of efforts on renewable over last 2-3 years, a lot of incentives, a lot of push from government, which has also brought in a lot of private players to start investing money big time, right? And that's the change where the money will be attracted where it makes returns. So it has to be the value proposition has to be there. If the value proposition is there, the money is going to be there.
Sure. I'll come to PPPs in a second, but first let me, if I may have Katan's opening remark. You're the senior banking sector professional on this panel. Give us a color from the financial services sector's perspective.
Sure. Good afternoon, everybody. Obviously, great to be here. The numbers are clearly eye-watering, right? I think we all know that. So I tend to take the approach of, look, you have to break these things down. And what I mean by that, it's really around how you mobilize and harness different forms of capital. Because in all my sort of 20 years experience in banking, what you do find is that there is a lot of interest out there, but it's often, the variation is actually the level of risk appetite. And if you take the approach of how you're going to basically take these different forms of capital and stitch them together, usually what happens, and it's very much building on Hiten's comment, if it's a good project, it will generally be able to raise capital. That's always been my experience. Since I've come to India a year and a half ago, I haven't seen too many projects that have failed to actually raise leverage. And I think the beauty of India is that, you know, you've got a situation here where you've actually got quite a deep local currency market in INR. A lot of the companies here also have access to foreign currency lending as well. So that in of itself is actually quite a unique feature as well. So I look to break this down, Gaurav, in terms of mobilizing these different sources, then matching them up based on you know, the risk appetite. I'll come on to talk about it later as well, but I think recycling of capital is going to play a very big role in this as well, because there's a lot of money that is effectively sitting in idle assets that can be mobilized as well. So I'll come on to talk about that later. But really, you know, that's the way I see it. The project has to stand up. The merits of the project have to be there. People talk about bankability, but let's think about investability as well, right? From an equity standpoint. Are you going to put your own money into this thing? Will obviously be an acid test, you know, before you assemble a group of lenders. So I'll pause at that point. Obviously, plenty to come back on.
Katan, if I may continue with you, and then I'll come to the rest of the panelists about public-private partnerships. But specifically on something you just said, you look at these mammoth projects, not just in this country, but in the global south. From your perspective, you look at sort of like multi-source financing. What role will that play in some of these huge projects, the mega wattage that we seek, the kind of scale that we seek? What role is that gonna play? If you could just briefly give us your
yeah, that's a good question. So again, it's actually playing to the heart of what I've already said, right? You'll have development banks, for example, who are there much more as enablers, want to provide the concept of additionality. That will be more open to sort of early stage risk capital. Then you could have people like export credit agencies as a good example, right? They can mobilize very big capital, but it would either be based on where the equipment is being procured from, or it will be based on something that is benefiting them from a national interest standpoint. So it could be offtake, it can be the nationality of the sponsorship. Then you can go into institutionals. For example, a lot of the insurance, a lot of the pension funds out there, they're more interested obviously in steady state. So that may be a form of capital that you consider a little bit later. And then where banks and capital markets have to get to is effectively understanding that if you want to achieve these objectives, there is clearly a step up in terms of technology happening, okay? Now, each of these individually are not new technologies, but when you pair them in a configuration, it is a new application of an existing technology. So you start to get the picture of how effectively the capital structure can be built up. And, you know, everyone talks about the energy trilemma. What's the trilemma? Security, sustainability, affordability. Well, I can be very clear on this. The affordability aspect is actually rooted in the capital structure.
Bhupinderji, we've had this conversation throughout. I had the pleasure of speaking to Honorable Minister Puri. Katan just mentioned affordability is key. Finance matters, but keeping the public on board also matters, and profoundly in one of the world's largest democracies. How do you reconcile the finance with the public mood and bring everybody on board?
See, what we try to do is, you know, at the heart of what we do is keeping the consumer interest in mind. That's very clear. We moved from, you know, a regulated price structure, tariff structure, to a transparent e-reverse auctions, and that was primarily to lower down the prices, and it has worked. It has worked wonders. What we had 10 years ago is, you know, today what we have is only a fraction of what we had. You know, we moved from 16, 18 rupees of solar to now 2 rupee 55 paisa or 2 rupee 50 paisa. We had come down to 2 rupees 199 in fact. Now it's a little higher, but that's the kind of price, you know, difference it has made. What we try to do is, when we are taking decisions, you know, when we are trying to see what the mix could be, how are we going to go forward, we have to keep the consumer interest in mind, and therefore, although we have planned for energy transition and we have announced it. We want it to be a mix which is suitable for the country, which is suitable for energy mix, a price, a weighted average price which would be good enough for the discoms to buy and pass on to the consumers. I mean, there are different mechanisms that we work with. You know, we, although renewable energy now is actually we are, our cost is lower than the fossil fuel energy cost. I think we are going to go down that path continuously. We are going to lower that cost because the fossil energy is not going to rise that fast, and we do not plan to expand that capacity too much. The way demand is increasing in India, our first objective is to meet the demand. That is very clear. Outages are history. What used to happen earlier, outages are history. Just to give you an example, in 2024, the entire calendar year, we met the peak demand 99.999% of the time. We met the entire demand of the country, the electricity demand of the country, more than 99.8%. That's the kind of improvement that we've had. We want to make sure that we continue to meet that that goal. The first thing is availability across the country, 24/7. We have a national grid, which is the largest national grid in the world, and now we can transport from any corner of the country to any other corner of the country. And the reason is to make sure that energy prices are stable, and they're kind of within control, they're not going overboard. You have these exchanges, power exchanges, which are functioning so well, where when we want to make sure we've introduced caps on that, kind of prices, which can, how it can happen, how it can take shape. But that cap is just to make sure they don't go overboard. But normally they are all within range. Discoms do buy power at 10 rupees, 8 rupees, 9 rupees at these exchanges when they need to supply to the consumer. So we're kind of trying to look at the entire picture from that angle, making sure that we always keep the consumer interest in mind.
Sure. Roberto, the amount of green wattage that's been talking in this country, the Prime Minister alluded to about 500 gigawatts by the end of this decade. A phenomenal amount of discussions are taking place. So how do we bring, put public-private partnerships at the core of it to take this discussion forward, especially when it comes to the global south and the green revolution?
Yeah, that's a very important element. Being the institution for public-private partnership is very dear to us as a concept. I think the first things, and we have just been hearing is how you have to take consumer on board, but you have also to take all your ecosystem with you, right? Because if you go and you do policies that then the industrial sector or the investor don't buy into, is really difficult to make it work. So that's one element. We have done a study, and one thing that has to be clear is that in every country there is a different transition. There are different sensitivities, both at consumer level and business ecosystem level. And so this needs to be taken into account. The classical example is nuclear. Nuclear, you can have a different perspective on it, but not every country will have the same reaction. So the way it has to be approached is really country by country. But in the work we have done, we have identified 100 different solutions where public-private partnership have really worked well, adapted to each country. So you can't replicate all the 100 in every country, but each country can take some of these and then replicate. And I think this is a way to accelerate and learn from others that have made mistakes, but also success. Right, so I think there is a great opportunity there to really look at the ecosystem and say, okay, this can work or this can't work in the current context.
Sure. Hitesh, you're part of this ecosystem. Very briefly, you alluded to in your opening remarks, it has to be investable, bankable, as Katan was saying. It creates certain unique complexities, but also very unique opportunities for companies such as itself.
No, correct. I think, and that's why, I said, at the heart of, the problem, there is a bigger solution, and India is in a sweeter spot compared to a lot of things. We don't have to repeat the mistakes. We have a better line of sight of how things have been done elsewhere. So, for example, if a say private public partnership has to work, one is, everybody has to be clear as to, what do they get out of it. Like from government point of view, we heard, yesterday we want to move to a gas-based economy, too much focus on a renewable power and all those things. So from a government point of view, I think the benefit which they think in their mind, right, whether it reduces your dependency on fossil fuel, imports, forex, and everything, that should be their overriding factor for them to make a decision. For a investor, who is investing in the infra, right, what value they will generate, as I said, it has to make money, right? It could be relatively riskier, a bit lower in the beginning, but how it ends up in say 5, 10, 20 years when the model will change, when the usage will change. For companies like us, who are into business, who could be a consumer as well, right, in the larger scheme of Vedanta Group I'm talking about, how do we ensure that our business runs on a greener fuel, and is there a value proposition which we can sell it to our customer who are willing to pay a premium, so that, it is also not hurting our pockets. So I think if we look at, the different aspects and the benefit which each individual, player in that, the whole game will make out of it, I think that will, create that, value proposition. And if I, talk about the real end users, the public as such also, they're also, India is a large country, it's if you compare the size and the population, it's a few countries, which are into one, right? And that's why we'll have to segment it differently. What a user is willing to pay or do in, say, a city is very different to a small town or villages. And there we'll have to give that value proposition, right? That if a user in a city, I'm sure they will be willing to pay, but if there is a supply which is assured, which is delivered on time, you don't have to depend on, a secondary source of power, I think people will be willing to pay. But when you go to the smaller towns, the value proposition is availability, right? And whether it is at affordable price. So those, all matrices, are different for each segment, and we'll have to ensure that the people realize what value they get out of it, and if there is value, everybody will move towards that and will create a better environment, and then there'll be no discussion on bridging the gap, because people will be willing to put their skin in the game to get that out of for themselves.
So, Gaurav, if I can add a point here. So we talk about PPPs. If you look at the electricity or the power value chain in India, if you look at generation, on the pure generation side, more than 50% of the capacity is effectively owned on the private side. Okay, it's not the case for transmission, and it's not the case for distribution. And just reading a few of the stats, there is about 10 lakh crore tied up in idle assets that are effectively state-owned in some shape or form. Right. These are very reliable assets that are there on effectively an availability basis. It is absolutely ripe for monetization. And it would be a very good way to say, well, let's look at what we've got here. Why don't we open that up, right? You talk about PPP. Well, it's been very successful on the generation side. There's no reason why it can't be done for the other segments. In fact, the risk profiles are lower there as well, right? It's effectively what I alluded to earlier, right? Where people are terming them idle assets. So I see a lot of low-hanging fruit as well from a government standpoint, where these specific areas of the value chain can be monetized and should absolutely be factored in. And if you look at the investment that's needed in transmission, it's about 9 lakh crore through to 2032 is what I remember. And that's, you're talking 85, 90 billion US dollars, right? These are big numbers. So I think that needs to be part of the thesis here, because as I think I've underlined, a lot of optimization that is available.
Sure. Bhupinder, may I ask you for a response on Katan's very point he's made so eloquently about transmission? And of course, we were discussing before we came, green hydrogen is all the rage at this conference. It begs to ask the question, how green is my hydrogen, and what sort of investment that would court?
For green hydrogen, what we've estimated, of course, our target is 5 million metric tons of production by 2030. Our estimate is that we will need about 8 lakh crore of investments in building up these facilities. And of course, these facilities is going to be not only in the green hydrogen production facility, but also including the RE plants which have to power the electrolyzers which will be running. This we are in fact, when the mission was launched in January 23, exactly 2 years ago, we were treading into unknown waters. The world was treading into unknown waters. There was a lot of ambition, there was a lot of hope, and we also came in with a lot of hope and ambition. And I'm very happy to note that I'm sure there's some companies which are here, which are included, which are participating in that. We have a budget of about 20,000 crore, out of which 17,500 crore, over $2.1 billion, is actually for incentives. And we've already awarded what 40% of those incentives totally. And some of it is in process. And then what we are trying to do is make sure the electrolyzers are there, the supply chain is there. So we've awarded all the incentives. Electrolyzers companies now started building those plants. So that manufacturing ecosystem is going to come up. Green hydrogen production facilities are now on the anvil. In fact, just to give you an idea, it's not government which is going to invest in. We have investing the incentive part, we are investing the infrastructure part, we are investing in the R&D, we are investing in the ecosystem, testing facilities, and so on and so forth. However, we have 17 companies, big companies, which have announced plans of producing green hydrogen in India. And if you total up in green hydrogen equivalent terms, either they are green ammonia or green hydrogen, but in green hydrogen terms, is 7.5 million metric tons per annum. And that's the kind of, people they are so confident that the ecosystem which is building up will happen. I would just to add here on the financing part of green hydrogen, because it's something which is very central to what you are saying. Green hydrogen is new. The banks and the financial institutions are not aware in India. They are learning. It's a new thing. And whenever you go into a new thing, we have to do a lot of outreach. We have to do kind of skilling in some way, capacity building, to make sure that the financial institutions in India understand what we are going into. So either whether RE plants are very simple, everybody knows about it, it's happening. But the green hydrogen production facility, the kind of risk it is there, and so on, we've had to really go out and actually explain and do capacity building, sort of in consultation with Department of Financial Services, or trying to make sure that the financial sector understands the implications and understand the scope. So, despite the fact that we know that the private sector is going to look for financing, we need to make sure that financial sector understand. They are doing it now. The second aspect of green hydrogen is because we want to have the lowest cost of green hydrogen. That's how it's going to be successful. We just cannot afford. Whereas in electricity generation, we can still afford, because it's a basket, and you can average it out, and you are able to afford even a little higher tariff when compared to the previous bid. However, in green hydrogen, our purpose is very clear. If we are not the lowest, we will lose out. Nobody is going to buy. So therefore, we are trying to minimize the cost, and therefore we have to have mechanisms in which maybe the power plants and the production facilities will happen in special economic zones, and maybe they'll be able to import equipment at a cheaper cost, and therefore thereby lower the cost. But that means they'll need foreign currency financing.
Sure.
So therefore, we have to have enough facilities in India. Financial institution must be ready. The international financial institutions must be there who are willing to finance such projects in India in foreign currency terms, and therefore allow them to succeed. IRDA, one of our NBFC, has opened an office in Gift City, primarily for this purpose, so that they are able to take foreign currency loans and thereby lend to such companies which are going to set up green hydrogen facilities in India, or somewhere where they have they have export earnings and they're able to pay off the loans.
Sure. Ladies and gentlemen, we're sort of just past the midway point of this conversation, and Bhupinder has set us up very nicely for the latter half of the conversation. It's worth turning it towards the nascent technologies, what can be backed to facilitate this energy transition, and of course, as Hitesh and Katan said, that patient capital, which ultimately has to make money. But we'll come to money aspect in a moment. But if I may go to Roberto first, what I would say to you is, as Bhupinder just mentioned, that green hydrogen is a young upcoming technique. We need to imbue this into the wider energy ecosystem. The previous panel was talking about placing AI at the heart of the energy transition. From your perspective, sir, from your prism, how do you see the approaching horizons, the emerging technologies, and of course the latter half of it, parking patient capital there?
So this is an important point, and I want to pick up on both the last 2 points. Effectively, the energy transition from this perspective is an infrastructure game, right? When we talk about electrification, we are talking about tripling, the electrification and so on. So you need infrastructure, you need transmission, you need the latest technology to transmit with less dispersion and so on. When you talk about hydrogen, is again infrastructure. So the complexity of the energy transition is that we are going to move from a relatively simple number of energy sources to a much more diverse set of energy sources with a more diverse set of transmission opportunity and challenges. So I think this is the challenge that investor will find to understand, okay, where is going? And I give you a practical example. We are working on this initiative on industrial cluster. That is effectively, if you look from a port perspective, how a port connect with another port through shipping, right? In the past, you would have only one fuels that will be bunkering to move from port A to port B. Now you have many more options going forward. You have ammonia, methanol, you have LNG, etc. So it's an infrastructure game. Which infrastructure are you going to finance in that port versus the other port? Because the two ports will have to communicate. And when I say two, is the 100 ports around the world. So it's really, really important that the infrastructure game is well understood and accelerated. I just wanted to make also another point, because we have spoken a lot about India for obvious reason. That is not only because we are in India, because also what is happening here will influence the overall energy transition. But India is also in a privileged position. I think it was mentioned. The foreign exchange risk is different than if you go in other emerging economies. The policy stability that there has been here over a decade has allowed investment also to flow more confidently. So I think we shouldn't underestimate the challenge that there are in many other economies. They don't have this privilege that has been deserved and acquired, but this is part of the challenge that when you look beyond India, many other economies still have to go through.
Okay. Now, if I may extrapolate on that, come towards you. You extrapolate some of the bits of what Roberto has said, and yes, if we could just venture beyond India and look at the global South. As a whole, holistically speaking, what role do financial markets play in enabling these nascent technologies, or in terms of in infrastructural terms? You just touched on transmission. The whole nature of the grid is going to change. It's got to become smarter. That's what a lot of other sessions this event have discussed. So, what's your thinking, and how do you park this patient capital? You have to make a very prudent call when you back some of these projects as a financier.
Yeah. So look, I think clearly the patient aspect of it has got to effectively not forego, but maybe defer for a while in terms of returns, right? And focus on the enablement and ultimately the sustainability of the technology. But I am going to bring it a little bit back to India, Gaurav, just because if you look at what's already happened on the technology curve, you've gone from very simple either solar or wind projects to hybrid projects, to complex renewables, and to basically to round-the-clock power. Now, round-the-clock power is effectively pretty new, okay? And certainly international banks like ourselves, we finance those projects, okay? So in these situations, it's never black or white, okay? Anyone who's actually been through these projects know that it will be an iterative discussion to say, if it doesn't do what the label says on the tin, what is effectively going to be some form of recourse in that scenario? That's how all of these projects have worked, okay? So it isn't black or white, like I said. These projects have happened when, several of the international banks like ourselves are doing the FDRE projects, which are a lot more punitive for the developer, right? Because they've got to match the demand profile in 15-minute segments. So the discoms have actually pushed that risk back onto the developer as well. And actually, in these situations, is where the merchant piece of it becomes very important, as well. So look, I think on the technology side, I think companies here are doing, to be honest, a bit of a world-leading job in how some of these segments are developing. We support companies like Renew, for example. What they've done in round the clock and FDRE it's phenomenal, and it can really be replicated. So again, I think it's really about how you understand the risk, what the contingencies are going to be. That's the conversation that needs to be happening. And what I would tell the audience is that conversation needs to happen at an early stage, okay? Because that's how you're going to maximize bankability. And Gaurav, there's one very important point here as well. Let's talk again about affordability. I made a comment around the capital structuring side and how that will play into affordability. Well, just to give you some numbers, if you look at a typical solar project in India, I don't know, the tariff, let's say, is 2.5 rupees per kilowatt hour. Well, what's the impact? Does anybody know what the impact is if you reduce that tariff by 1 paise? What does that do to the equity return? I wonder if anyone has any idea. Any guesses here?
You take
so
it away.
It will bring the equity return down by 0.2%, so 20 basis points, okay? If you look at the leverage, okay, if you take the leverage from, say, 75 to 80%, okay? So I don't want to use any complicated terms. You're funding $100. It was 75 that was coming from debt, 25 that was coming from equity. You move it up to 80 because the cash flows can support it. You know what? Your equity return will go up by 1% in that scenario, okay? So these are the sorts of levers that can be played with. And I think where India has to get to, and it's happening, is actually really valuing the merchant market as well. Because when you look at these projects that are happening, they're having to be oversized. Why are they having to be oversized? Because the demand profile is so stringent, okay? And the penalties for failing to meet that demand profile are quite punitive. So, as financial institutions, one of the things we need to be doing is getting a lot more comfortable with that market, because it will make a real difference in terms of being able to juice up the return. So I hope that gives you, a little bit of a sense of why the capital discussion and the capital structure is so central to the affordability discussion.
Hitesh, affordability matters, the parking patient capital matters. You touched briefly, I've had conversations with your peers in the hydrocarbon business. For you, efficiencies matter a lot. The way you extract and the mileage you extract out of the extraction processes these days differs vastly from, say, even 10 years ago in terms of the efficiency. So a number of them say that when we are bridging this gap, we should never lose sight of process efficiencies. So how does that come to the fore from Cairn's perspective?
No, I think, efficiency is very important, given that, our business primarily focuses on, finding oil and gas. And once we find it, how do we, monetize it and then, supply it to the, refiners. Now, in the whole process, in the whole chain, right, whether I do exploration, whether I do, development, or I do production, if I am more efficient, which would mean that, there is a advantage to me in terms of my capital deployment also, because my risk-taking ability will increase from an efficiency point of view. And at various stages, it matters differently in the sense, in the exploration, if I have a better line of sight, because there is always a chance of success. The chance of success is just 20-25%. So how do I improve it? If there is, even if AI, for example, now we have started using it in bits and pieces, but if that helps to increase it by a percentage or two, my risk-taking ability, increases multifold because the optionality increases. When I'm looking for something to be developed, right, if I can do it better, more efficient, obviously it pays off. But I think the most important part, which is driving this efficiencies is, at least from our context, is replicating what has been done elsewhere rather than, trying to create ourselves. So a lot of things, especially from an, upstream oil and gas point of view, has been done elsewhere. So how do we bring that to India? How do we make Indian market sizable so that, all these companies, whether from a supply side, whether from technology side, They come and form a base here and accelerate our process of development. The efficiency which it will bring will help to produce more in India. It will help to bridge that gap as well, because the gap today is not just about money. The gap is about accessibility. And as we said, what is now happening is there is a basket of opportunity which will be available, and from a financing point of view or from an affordable point of view, every opportunity will have their own efficiencies, and whichever is more efficient is one where the money will flow, where the end user will end up using it. So efficiency in at least from our point of view is the central piece of how do we operate, how do we ensure that we reach to our vision of what we want to do for India. So it's a central in our theme.
Roberto, you have a point.
I just wanted to pick up on this point because your earlier question was about technologies and your point on efficiency. I think we have to think about technology not only in terms of energy technology. You referred to AI. So everybody, and I don't know what was said in the previous session, but there are a lot of conversation about the demand of energy for AI. But the other big aspect here that you underline is what AI, or maybe even quantum, if I think at the session before, can do for energy efficiency, so to reduce the waste of energy. So this is where the new technology are not energy technology only, are really also digital technology, being AI or quantum, and what there will be their impact on energy efficiency and the energy system of the future. So again, we have really to look at this as a big opportunity for countries that are going through the transition to leverage the latest technology to accelerate their own transition and maybe making a business out of it and creating jobs and so on. So this is just the link to the technology.
Bhupinder, if I may come to you, we've heard so much from our colleagues of the various aspects of how we bridge the gap. It is all anchored by policymakers. In India, it's been said, not just at this event, but way before, that you're very pro-private sector, that you see a collaborative effort in terms of finding the energy transition Alamo. So give us, sum it up for not just for India, but the wider subcontinent, the role of policy making in bridging this gap.
If you see how India has succeeded, if you call the last decade's progress as success, which I think I always claim, and I'm supported by, I think, this feeling around the world, that India has been successful in the last 10 years. How have we done that? We've done that not by investing in government resources. I mean, of course, Katan mentioned about our investments in infrastructure, transmission, distribution. That is there. We initially started as a country which had to invest because the private sector wasn't really there. But in the last 10 years, what we have done is try to bring out policies, trying to make sure that we have mechanisms in place which allow the market to take it up on its own merit.
So,
The power purchase agreements that we have at 25 years PPAs is one of the best, most respected document in India for RE financing. The financial institutions are very comfortable, the private players are very comfortable, and therefore when the market is comfortable, we only had to make sure that the PPAs are arrived at through a transparent process. And looking at how we've done, we've tried to make sure that we keep improving upon our regulations and the model PPAs and so on, and the way we are arriving at those PPAs in a method, through a mechanism which is well respected and well known. This is what needs to be, if you're going to do it around the world. There's no other way to do it. I mean, it's impossible for governments to finance this entire transition. So therefore, government's role is to make sure that we come out with policies, we bring out regulations which are well known, well respected, and we want private sector to respect that. We want the financial sector to respect that, and that's what we are doing. And therefore, I think the way we have progressed, the way we are trying to evolve, is trying to tweak these regulations to make sure that we defend the consumer's interest. The electricity consumer, we are making sure that we are defending the consumer interest as we go forward. We keep tweaking with it, but it's without policy, it's not going to happen. And therefore, when we are talking to other countries, India, the people do come to us and say how you've done it. We try to give our example of how you've done it. And what we try to make sure is to pass on this message that if you really want to succeed, this is what you're going to have to do. For example, just give you a specific example. The International Solar Alliance, which India is kind of spearheading, based in India, we are making sure that the smaller economies who are not yet into transition are able to learn from the best practices around the world, not only in India, but around the world. You give you a specific example, Cuba, has really is short of energy. They wanted ISA's help in bringing out, a bidding for solar projects in Cuba. And in fact, ISA has helped them formulate those documents, try to make sure that there's a guarantee, sovereign guarantee available, because that's initially you'll have to provide such mechanisms where the market becomes confident of what you do. And based on that, the first projects have been very, very successful for the first time ever. And now they want to triple that. They want to say we want to go to 2 gigawatt. That's the kind of scale which can be done. And the same thing has to happen across in Africa or other LDCs.
Roberto, if I may continue with that point that Bhupinder just made, how crucial, how critical it is for policymakers to interact with each other and take on their own learnings to take the best processes, the best practice in terms of regulation policy frameworks.
Yeah, looking at it from having looked at different markets, if you like, etc. One thing that India did very well, and much better also than many of the so-called developed world, is getting out of the way. When we talk about policy, there is what to do and also what not to do, and or removing bureaucracy. So one thing that happened here is fast deployment of the project, because the permitting, the bureaucracy behind that in countries like mine will take 10 years. Here was much, much accelerated. So I think this is where policy need to be thought. And I think, again, from our learning is the country that have done best is really to put a clear ambition, and then they've developed a roadmap to achieve that ambition, and then they've taken away the choke points, those elements that are impeding that acceleration of the transition. So these are the 3 key things I would say.
Sure. Hitesh, sum up the operating climate. How much does a bearing have what the policymakers are conjuring up? I think it's not a yes/no answer. Of course, it has a massive bearing, but how does it color your mindset in terms of forward investment decisions?
I think what we have seen over the last few years is from obviously as a business we expect a lot of clarity and a lot of continuity, but I think more importantly what we have seen is the ability to listen first, right?
Sure.
Because the people who are running the business, right, they obviously know better that what they need to get there. So we have seen that listening capacity is there, right? The voice of the industry gets heard, and then obviously the changes in the policy or whatever is required, whether it is a PLI schemes or there are incentives on tax part or R&D part. So those follow through. So I think that's the most important part. Otherwise, you can have policies, but if it is not put effective to use, if it is not easy to use, then it makes no sense. You can have the best or the greatest of the policies. So I think that change is happening, and that is everybody is reaping the benefits of that. The other part is once something is in place, how is it easy to use and implement, and how is it easy to have the continuity over a period of time, not just 1, 2, 3 years, but a lot of things have a longer gestation period, and especially if we talk about energy transition, a lot of things will have a longer gestation period. So it's not just 1 year, 2 years. So how do we ensure that continuity is there? How do we ensure that that the belief in the organization is there, that things won't change, and we won't be up for a surprise when we have put our money on the table, right? So I think that is working quite well. At least as I see over the last decade, things have improved step by step. From I think companies' point of view also, what is now happening is companies are also aware of what will work, what will not work. So when you plan, you need to be that conservative in that sense and not too much aggressive of things. In the sense nobody is going to go out of way to make things work for you. And as I said, ultimately you'll have to see that you are able to survive. while the capital might be scarce, it will be difficult to attract, but you need to clearly define your baseline, what works for you, and if it doesn't work, you have to go back to table and then work it out rather than put your money on the table. Sure. So I think those things are working fine. Obviously, a lot of industry associations have become quite active, and it's not just individual organizations which are working, but they are working together for a larger goal, and that is probably also the reason why things get heard, it gets moved. So I think it's working positively in that sense.
Katan, if I may, I'm going to ask you an opinion question here. I'm conscious of time as well. Listening to our colleagues, is there are we from a finance sector perspective, is there a danger that certain markets where the policy framework is more conducive, the demand is there, the terms are better, like India, for instance, end up serving as a magnet for investment, by which the gap narrows here, but it widens elsewhere where they're not moving perhaps at that pace, if I may?
Yeah, no, look, I think it's, very possible. I think if I look at the background I came from, where, I used to do a lot of structured finance in, jurisdictions like Africa, where, often you wouldn't have, the continuity. Some of the perceived risks, were quite high. I think in direct answer to your question, yes. And I think that's already borne out, Gaurav, in a lot of the, if you look at, the foreign investment flows in India, they've been pretty strong. And I think that's going to, set to continue. And yeah, I mean, you can see the policy aspects at work because, coming to things like production-linked incentives, that's worked very well. And that's actually encouraged backward integration in India, which ultimately is actually going to play into the affordability as well. Then, if you look at the power market, there was a big concern several years ago around the financial health of a lot of the discoms. And the government then took the step of basically interposing SECI into that arrangement, and it enabled billions of dollars, to pour in and finance these projects. So the policy has certainly been enabling, from my perspective. So is there, so that risk of, others getting left behind? And I think one of the roles we play is actually obviously mobilizing other forms of capital. So, we've seen different nationalities of banks come into India in quite a significant way over the last couple of years. Some of the Far East banks, some of the Middle East banks, there are institutional investors coming in, as well. So I think, it's this enablement that has occurred at a policy level that has effectively facilitated that.
Sure. Ladies and gentlemen, we're at the flag of the conversation. It's where we sum it up. We've discussed various aspects of the transition chain. We've discussed how to bridge that gap, how to just approach it in 5-year increments. And our fellow panelists have enlightened us in that respect. That we've discussed policy making, we've discussed technologies, we've discussed various modes of finance, we've discussed complexities and opportunities. Now the big question is, when we discuss a topic as profound as this, it begs to ask the question, it's words are all well and good. Some of the actions, let's be very honest, very candid, some of the actions have also been described here. But just on a very macro level, by way of closing this session, it would be worth asking our panelists, how do you put sort of words into action? Some examples we've had, but this is about the next 5, 10, 15 years, the future. So bringing things to a close, and I'll come to you. Just take it away. Give us a very brief feel of how to put words into action.
Sure. I think I covered it in a lot of the themes I mentioned. I think as far as the bank is concerned, we're putting our money where our mouth is. We've doubled up on our global green energy targets. We did that at the end of last year. I already talked about mobilizing other forms of capital. We're in discussions with a multitude of stakeholders to bring them closer to the Indian market with different structures, quite a lot of risk participation, quite a lot of that happening between public and private sector. So, and I think if I look at the projects that we successfully funded, Gaurav, in the last year and a half, we've done C&I projects in India. We're doing, the hard to abate industries, the zinc, aluminium. So the decarbonization there is happening with green power. I already talked about, round the clock. So I think it's got to be, let your actions do the talking. But I think from a financial commitment, the potential here is compelling. So I think for us, it will continue in a very significant way.
Hitesh, may I have your perspective, please?
Yeah. So, I represent the industry here in that sense. So obviously we also have to do, walk the talk. As far as, Cairn Vedanta is concerned, our net zero is 2030. Now there are steps to do it. Most importantly, from an oil and gas point of view, first is, how do we ensure that when we do a capital allocation, are we investing more on the gas side, to help, India also transition from 16 to 15% and depend more on domestic. That is one part. Then in the operations, now is being run through renewables, right? So how do we invest money, put money there, and rather than taking from grid, how do we ensure that we also support the renewable? From a larger, group point of view, while renewable is a focus, but then, as I said, a lot of our products which we manufacture, how do we create that value proposition so that the end user also starts, giving a premium for being a green product? So all this role, I'm sure, each of the companies, every industry is playing to ensure that we are part of the transition and we contribute and accelerate that journey.
Sure. Roberto, may I have your concluding thoughts?
Yeah, I think one element that I briefly touch upon is this idea of the industrial zone. So one point is looking really at this industrial cluster, industrial zone, and how industry can look at it together. So public, private, but also cross-industry coming together and optimize the energy consumption, because industrial zones are where GDP is produced, jobs are created, and the carbonization can happen as well, accelerating the transition. And there are a lot of learning that can be done at global level. And so copy 90%, innovate 10%.
Sure. Bhupinderji, you've heard everybody's looking towards India. Bring things to a close with your perspective, sir.
Thank you. India is walking the talk. That's very clear, and I'll tell you why. We are, as I mentioned, we are ambitious in our target, but we are sure that we will reach it. For example, we are at 220 gigawatt of non-fossil capacity. We have 250 gigawatt of plants of which are under implementation at various stages. Either they're actually under setting up, or they're at the tender stage. So we are there. We are doing 50 gigawatt of bidding every year. So we will reach 500, whether people believe it or not. That's number one. Number two, I've outlined the kind of goal that we have. We need $400 billion. And we had, of course, here this is because we're talking about bridging the investment gap. So I'll just focus on that for right now. Last year we organized the RE Invest after several years. And what we did was we not only celebrated the achievement of 200 gigawatt milestone, but we also requested the industry and the financial sector to indicate what kind of commitments they want to give. It's just an announcement. They want to say that this is what they're committing, the kind of investment they want to make in the sector. And I must tell you here that the banks and financial institutions, including the NBFCs, committed to giving 24 lakh crores of lending in the next 6 years. And that's, as I mentioned, relative to last 10 years is like 5-fold, 6-fold of the amount. And therefore, what we are trying to do is, we're not really trying to do our bit. We are investing in transmission and distribution. We continue to do that. India is the only country, probably one of the few countries where, if we start a project from scratch, we can do it in 3 to 4 years. Yeah. Today, I know some people are finding difficulty in connectivity in places like Rajasthan, but the fact is that other than Rajasthan and some parts of Gujarat, you can get connectivity elsewhere in the country if you want to. Of course, you'll have to have a little differential tariff if you want to, if you can afford that. So, we have an ecosystem which we are trying, which we feel is pretty good. We have planned for it, and we are pretty sure that we'll get it. So we would like, these are the kind of actions we are taking to ensure that we'll reach the target.
Sure. Gentlemen, many, many thanks for your insight. We are richer for it. Ladies and gentlemen, a round of applause for our panelists.